Alright everybody, thanks a lot for joining me as at this Tuesday afternoon market recap. Again, really continuing off from last Wednesday's session, these markets collectively have been more or less moving sideways. It does appear to be that of a stair-step type of consolidation or very short-term pattern. However, if you take note of where this is taking place, we are also essentially back testing a lot of this past resistance as technically speaking new support. So really the way that we are looking at the market is that we are expecting that of a pullback to take us on back down to potentially on the Dow Jones Industrial Average, roughly 23,000 if it chooses to set up from really the current location, which is showing up just shy of 24,000. Or if this stair step does have a little bit of legs to it, we may see an additional little pop, which may continue a little bit further into this week before, of course, turning back down and essentially retesting again 23,000. Both end results at this particular period based on the retest of that neckline. Not to mention, again, our short-term oscillators moving out of oversold conditions, pushing back up into overbought. And again, where these markets are placed is going to build into a lot of potential volatility, which may be on the immediate horizon for the markets. What I mean by that is really for the past month or so, we have been speaking prior to the breakdown, right, in this market for these markets potentially coming back on down and retesting their primary macro bullish trends. That did play out as we moved into December. However, again, what we were looking for were a very quick snap back sort of whipsaw reversal, which did take place. And then, of course, what a lot of people, unfortunately, are going to buy into or essentially sell into is the continuation of that of a larger, all right, more deeper sort of bearish move. And again, I just wanted to stress the importance that at this particular time, again, we're not expecting this market to take out the swing lows that we have established collectively across the board on the US financial markets dated the 24th of December. In fact, as more and more people turn pessimistic, if this retracement, and the retracement I'm talking about is again the sell-off to the downside, all right, as more and more people begin jumping on board with the short side of the market, you can look for, of course, one, this primary bullish trend line to hold, but also what will most likely happen is that we will hold up higher, all right, further away from this primary bullish trend line, and also potentially a lot higher above what was that pullback to begin, more or less that of January, right? This current calendar year as well. So pay attention for this or to this. I would encourage you not to get too excited, right, by any bearish opportunity. It's most likely going to be very short term if it does set up. But collectively, we are looking at something like this happening. So during the pullback, we'll be looking for, of course, those white candlesticks to begin setting up down at these lower areas of support and then positioning ourselves again into longer term, all right, expirations on a lot of these market indices, whether or not it's the Qs, the SPYs, or the diamonds. That is essentially the trade setup. You can see on my screen right here, if you got into the Qs, they are pretty profitable right now at 6,696, but at the same time, you should be, again, tightening stops and locking in profits on the Qs. The same is true for the diamonds at 23,432. A little bit of a surprise to me to see the market still treading water, more or less unchanged for the week so far. But again, do not be surprised if and when you see this market pull on back down. We are starting to develop at the moment pseudo sort of shooting star candlesticks, but we're not really seeing any commitment to the downside at the moment, where more or less we are expecting the beginning of this short-term bearish move to set up from. Again, on the SPYs, 2,575. Here we are, we're trading just shy of 2,600 on the SPY as well, or on the S&P 500 on this particular market. If I bring up that of the Russell 2000 as well, I've got my add to chart. I'm actually in the wrong one at the moment. Let me just do this for you. You can see the Russell also is starting to slow down. Again, it looks like a little bit of a stair-step continuation. Whether or not we see a very short-term pop, it is rather immaterial. What you should be thinking about is looking for trade opportunities, okay, when the market, and if the market does pull on back down to lower areas, hold these lower areas and then set up that first real series, okay, or the continuation of a broader and larger higher low, which would be the definition of this bull market continuation. Don't buy into, I guess, the panic and the fear which may arise from the beginning of a sell wave. It's most likely not going to take out this swing low. Be prepared for it. It is going to be a little bit of a mental battle. But those who position themselves at these lower areas, if we do see this pullback, are going to be the ones laughing come February, or maybe even, you know, the final week of January 2019. The final market I wanted to show you also was the transportational average. All of these markets sitting at that key neckline, what people are deeming to be the key neckline. The problem is that you really cannot get bearish on this market unless we break this macro primary bullish trend. The problem is, at the moment, there is no risk and reward for the trade, really, from where we're currently trading out down to this area. I mean, you can make do with it, But at the same time, if you flip the trade and you think about the likelihood of this market continuing off from this primary bullish trend line, the risk and reward is most certainly favorable on the bullish side of this continuation. I still think this market is going to ultimately come all the way back on up and retest these all-time highs. It's just going to be a process. The process is what is currently underway. The next step of that process is short-term to the downside, and then of course the broader continuation to the upside as well. Very quickly flicking through our trades, we've got Apple holding up above 148.81. No major movements there. We've got Amazon again trying its best to hold this area. This was above 1,524. You should be more or less closing out of these trades. We are moving into earnings season as well. We've got Boeing Airlines above 329.10. That is another profitable trade right there. Baidu is sort of treading water. A little bit of a pop today at the moment. But again, you should be thinking about closing this out as we move further into earnings season. Caterpillar, you should be technically getting out of this trade as well. We do have earnings scheduled, I believe, for next week. COP. Another stock also above 63.98. I love this trade, by the way. It's a great trade. However, we do have, and by the way, these vertical lines on my screen, these are earnings announcements, okay, scheduled for the future. We've got CVX, not necessarily in this trade above 110.56. If you are, it is slightly profitable. But again, I encourage you to liquidate that trade also. Google is doing its best to actually break above this declining resistance area. It still hasn't done so. And until it does, I would simply leave that trade alone. IBM, still trading water, moving sideways. We have earnings upcoming very, very quickly on IBM as well. So you should be out of that particular trade. The same is true for Netflix last week. Should have closed that out above 283.80. All right, we got up to 316.61. This is still continuing. I mean, it's just rocketing to the upside. But at the same time, we're still really just opening a bunch of windows. We've got 3 open windows at the moment, and that doesn't really bode all that well for Netflix, because we should see that particular stock come all the way back down and close those windows. And to conclude with right now, we have Tesla still holding around that 341.85. If this does pull back and move sideways, you're going to see a fully fledged Bollinger Band squeeze in that particular stock. But what's most important right now is not necessarily the individual trade setups. It's more so understanding the market movements, being prepared for it, and then being ready to act when we see, all right, the market pull on back down and then begin to turn. That's really where the next crop of trades are going to come from. That is where you want to be actually initiating trades, all right? And if we do see a very short-term bounce here, the odds of this reversing soon thereafter go up exponentially, all right? The only bullish thing for the market right now is this stair-step consolidation. All the best, everyone. Goodbye.